The U.S. discount retailer Dollar Tree is finally giving up on Family Dollar. Now, it bought that operation nearly a decade ago and paid about $9 billion US. And now it's just flogging it off for just over $1 billion to two private capital firms, just giving up on that operation. We're joined now by Arun Sundaram, Senior VP of Equity Research at CFRA. Thanks very much for joining us. It sounds like they just could not make Family Dollar work, and they're just ripping off the bandage, giving up on it.
Yeah. Essentially, it's an end of an era for Family Dollar. They've had this asset for about 10 years, and really ever since they've had Family Dollar, it's been a drag on sales. It's been a drag on profits. There have been several execution related issues at Family Dollar, supply chain issues at Family Dollar, things like that. And today they decided, that about a year ago they launched a strategic review to determine the future of Family Dollar. And in the meantime, they closed down a bunch of stores, but today they finally decided to sell the entire asset to two private equity firms for just about $1 billion, which is, again, well short of that $9 billion that it acquired it for back in 2015.
Just looking at a 5-year chart for Dollar Tree and also for Dollar General, these deep discounters have not been good performers.
Yeah, the dollar channel, the discount channel, has been significantly underperforming over the past few years. I would say they've lost a good amount of market share, namely to Walmart, who I think right now is gaining a significant amount of market share. And really another reason is because both Dollar General and Family Dollar, they're located in more rural America. So they're typically more exposed to these lower income households who right now are feeling a bit more pressure given elevated levels of inflation and high interest rates. So that low income customer is feeling significant pressure. And that's one of the reasons why both Family Dollar and Dollar General, their sales have been lagging.
It seems not so long ago people were deploring the spread of dollar stores in the sense that they were squeezing out existing traditional grocers, apparently. And of course, their food selection is nothing like as good. But they've hit the wall in terms of growth, have they?
Yeah, I think it's a little early to say that they've hit a wall in terms of growth because both Dollar General and Dollar Tree, they're still expanding their store base.
Oh, okay.
Even this coming year, the Dollar Tree banner, they're expected to open 400 new Dollar Tree banners this year. There's about 8,500 Dollar Tree banners right now in the United States. So that banner is still growing, and they're mainly, Dollar General and Family Dollar. They're mainly located in, like I said, rural America, where they're typically underserved by other retailers. And you're right. Over the past few years, they've tried to become more like a one-stop shop, introduce more consumables, more grocery items, but it's still not the same value or convenience as you can find at a big box retailer like a Walmart, for example. And that's why over the past, I would say 2-3 years or so, the dollar stores, they've lost market share to the big box retailers, namely Walmart, who, like I said before, I think is gaining a significant amount of market share.
What about the advent of cheaper online shopping from the likes of Temu? Do you think that could be a factor as well?
I don't think it's as overly material, again, because it's these dollar stores are mainly located in rural America, that they're, I think, less exposed to these Chinese discounters like Temu and Shein. It already takes a significant amount of time to ship products. If you buy products from Temu or Shein, to ship it to your house in the U.S. and if you're located in rural America, it would take even longer. So I think they're a little bit less exposed to those companies, but they are, I think, more exposed to, like I said, Walmart, who is not just having a big presence in their not just have a big physical presence, but they're also Walmart's also growing their e-commerce business too. And now Walmart's also getting groceries and other general merchandise goods quicker to the consumer. If you buy stuff online and deliver to your home, or if you want to go to the store and pick it up, you can do that at a Walmart, but you can't do that necessarily at a Dollar Tree or a Dollar General.
The last time I looked, you had a hold rating on Dollar Tree. Is that still your recommendation?
Yeah, we still have a hold rating on the stock. You know, from a valuation standpoint, the stock does look a little bit cheap. It's trading at about 11, 12 times forward PE. Historically, it's traded around 18, 19 times of a forward PE. I think the eventual sale of Family Dollar will help alleviate some investor concerns, and that maybe that multiple could increase in the future. Because, like I said, I think the Dollar Tree is still growing. Like I said, 400 Dollar Tree stores are expecting to grow this year. The margins are also attractive at Dollar Tree. You know, operating margins at Dollar Tree are typically above 10%, which is pretty attractive in retail, considering that, like, for example, Walmart operating margins at Walmart are around 4.5% to 5%. So Dollar Tree is the unit economics is pretty attractive. They're growing pretty attractively, yet the stock's trading at a pretty discounted forward PE multiple, and that's why we have a hold rating on the stock, and we're not overly negative because of that discounted valuation.
Arun, thank you very much. Always great.